Ladies and gentlemen, welcome to the 2019 Gold Breakout Q&A session with the Independent Speculator. That's me, Lobo Tigre, the Independent Speculator. I want to welcome you all. I know that we've got a lot of longtime friends watching and hopefully a bunch of new friends in the making here who will be joining us for this session. I want to cover a couple things first before we go into the Q&A, and I really do want to spend most of the time on Q&A because you guys have heard talking heads, blah, blah, blah all the time. I'm not sure I can really add anything new to what you've been hearing, blasting the airwaves for all these days, hours, weeks since gold made its big breakout and before. But I do want to set the stage here a little bit. So let me say a couple things. One is I'm really excited about what's going on. If you've followed me for some time, you know that I'm not a normally excitable fellow. I'm not the sort to jump up and down, wave my arms, and pound the desk. Bye, bye, bye. But I'm really excited, and that's a good thing. When I've been kicking rocks and picking stocks, as they say, for 15 years, and when I've come across a story, I've gone and seen a mine or something or an exploration project, and I've come back thinking, wow, this is really great. I can't believe the market hasn't noticed this. There's a certain feeling you get. It's an excitement when you found something, you've discovered something that maybe the rest of the market hasn't seen yet. And I don't have a hard number for this. I can't give you a statistic that 85% of the time the stock went up, blah, blah, blah. But I can tell you that my sense is that whenever I had that feeling, it was usually really good. The correlation with an outstanding result was very high. And I have that feeling about the gold breakout right now. I did not have this feeling in early 2016. I was excited, but it wasn't the same. And the recent run-ups that we've had, towards the 1400 line, I've been excited a bit. It's hard not to be keen when you see something that you've been hoping for begin to materialize, but it's always been a watch and wait, watch and wait. This time does indeed feel different to me. So that's the good news is, yay, gold broke out, we're all excited. But I have to say, that scares me. It makes me nervous. And it should. And if you're feeling anything like what I'm feeling, it should make you nervous and cautious too. Now, I know the salespeople that I used to work with would, they pull their hair out when I say something like that. But I'm the due diligence guy, and I'm here to help you make money. I want to help you make lots of money. We'll swing for the bleachers sometimes, but part of making lots of money is not losing money. And so I don't want to drink the Kool-Aid. I don't want to get so excited that I believe my own nonsense or I'm closed to the possibility that I might be wrong about something. So I wanted to get this up front because I am excited, and I'm sure that's going to come across in the Q&A today. But I want you to know that it's not just Pollyanna, oh, yeah, happy days, nothing can go wrong. So that caveat having been said, let me make a couple introductory remarks about this breakout. There's a narrative. We like to say narrative instead of stories these days. There's a narrative out there that there's a new normal, that the powers that be, the Fed and all their cronies around the world, they've found a new economic paradigm, and it's okay to triple the money supply and nothing bad will happen. It's okay to blow your balance sheet, sky high, and nothing bad will happen. This is the new normal. All the old fears about printing too much money leading to hyperinflation, those don't apply anymore. The world is different now. This is the world of the new finance, whatever that is. I don't believe that. And I understand that it has seemed that this crowd has been right for years. It has seemed that they succeeded in putting off the catastrophe that began to unfold in 2008. And okay, they've put it off. Doesn't mean they've solved it. It doesn't mean they fixed it. And it certainly doesn't mean that the laws of economics and everything we've seen in thousands of years of history of human interaction goes out the window, and now suddenly you can debase a currency with impunity, or you can borrow forever and never have any consequences. I do think the chickens will come home to roost. I don't think any really intelligent person can fully dismiss that. And I think to some degree, some folks kid themselves. I think to some degree, some folks have to believe that. Certainly the people in power, certainly the Fed, can't admit that they really have no control over the situation now, or that things could go off the deep end. But I think most people out there, if they're too uncomfortable confronting this ugly reality, it's lurking there. And that's why the markets have been so volatile when anything bad happens. I'm going on too long about this, but I think it's important to set the context. And one more thing that's very important about this context is this breakout to 1400 is not a peak. I remember 2011, and I remember people saying, yay, gold 2000, it's going off to 10,000, 100,000, kind of like the Bitcoin folks in 2017. I think it's very important to not get irrational about things, as I mentioned at the beginning. But I also think it's important to say, oh, we're not there. In 2011, that was a peak after years of rise. Gold had hit record highs. That's not the situation today. We're talking about a breakout from multi-year lows. We're talking about the beginning of a recovery, not a blow-off peak. Completely different situation. So I do think that this breakout from a trading range that has bound gold for 5 years, more than 5 years, is significant. I do think that brings new attention and renewed attention to the gold sector. I think it makes people who are short gold very nervous. And I think we can see a lot of short covering in the near term, which will affect things even more positively. I asked Rick Rule about that in an interview I did with him yesterday about short covering. And I asked him, because I'm not a person who does a lot of shorting. And I asked him, what do you think? When will the shorts start getting nervous? When will they cover their shorts? And Rick said, the psychology that's important isn't in the short sellers. It's in the managers who watch over their margin. The margin managers, those will be the people who will start getting nervous. And his specific answer was to watch the VIX over 20, and those people start getting squeezed. Anyway, the point I'm trying to make is that the gold breakout we have now is significant. I think it shows a meaningful change in the appetite for gold out there in the market. This isn't just a technical squiggle on a chart. Nothing against my technical friends. I mean, I'm glad to have that technical support for my thesis. But I think it does show that something is different. People are aware. And I think a way to sum this up is that the global economy today is vastly fragile. And I think most smart people know that. And so, yes, they're making money while the sun shines on Wall Street or Bitcoin or whatever is running at the moment, the pot stocks. Everybody's willing to chase that momentum, but everybody's very, very aware that the party could end abruptly. And we have seen repeatedly, particularly since last fall, late 2018, that when the needle swings from greed to fear, gold responds as it should. It does its job. One last thing on that, and I think this is important. I think one reason why we're seeing this so clearly is that a lot of the people in the financial world today, investors, money managers, fund managers, professionals of different types, they grew up, they came of age, so to speak, in the financial world at a period where it seemed Warren Buffett was right, that gold had no useful no utility case for it. It was just this inert stuff that sat there and gathered dust, didn't even generate interest. What was the point? Nobody took it seriously. But we saw in the crash of 2008 that gold has a function that everybody in today's financial world needs to pay attention to. Not only that, remember our good friend FOMO, fear of missing out. Those people who disdained gold in the crash of 2008, they saw it take off in 2009, 2010, go to this incredible peak in 2011. And they saw people make a killing on not just one Bitcoin, but scores of mining stocks that added leverage to that gold run. All those people remember that. This is recent memory. Most of the people who experienced the agony and the ecstasy of 2008, they're still with us. They're still in the field, and they remember what gold did. So I do think this time is different. I think the fragile global economy is the setting. I think the breakout, remember that it's near the bottom, not at a peak. These are all things to keep in mind when we say, well, what happens next? And particularly, is it too late? To which my answer is no, it is not too late. And the other thing that readers of my free weekly digest, the Speculator's Digest, know is that I see this as an asymmetrical risk situation. Yes, gold could retreat, and there's no question. It could break back down below 1,400. Anything could happen. But in today's world, look at what drives gold. Look at the fear factor. Look at the debasement of currencies. Is this a world in which you can really imagine people all around the globe, Indians and Chinese included, saying, you know what, I don't need any gold anymore. The world is fine without gold. Or people in the West, people in Europe where there's economic trouble. Can you imagine them just saying, you know what, I don't need any safe haven assets? One or two might. But the world as a whole is not going to do that. So that makes for relatively little downside. And on the upside, well, remember that 2011 peak. That is ahead of us if I'm right. If this is indeed the beginning of the next major gold bull, that's what's ahead of us. So I'm not promising that. Things could go off the rail. I may be wrong, but look at what I am saying. What's the downside here? Well, gold may retreat a bit. It may continue to go sideways. It could go back to that rut that it's been in for years. If that's the worst case scenario, I'm fine with that. I know who makes money mining gold at $1,300. I know who has gold projects that will throw off a lot of cash in that price range. I know how to make money in the current environment if that's what we go back to, or recent environment, I should say, if that's what we go back to. But the upside, if we do have another one of these major gold rallies, this is a life-changing event in front of us. That's the real risk here. In my mind, the real risk is opportunity risk if we miss that. I'm not promising that gold will go to the moon. I am saying that it looks to me like it will do one of these rallies, silver with it, and if it does, it will make fortunes for those who bet accordingly. And you don't want to miss that. I don't want to miss that, and I'm putting my money where my mouth is on that. So that's my intro. That's my general take for the great gold breakout of 2019. And before I go to the questions, I'll just say one more thing. I have to pat myself on the back a little bit because there's no one else here to do it. I did predict this. I did write and publish in January a report saying that 2019 I thought would be the year that gold breaks out of its rut. And kudos to everybody who signed up for that and who acted and who has already benefited from the rally in gold and silver stocks that we're enjoying already. If you missed that, I have refreshed and revised that report. If you go to our homepage, at the very top of the homepage, there's a banner there with the updated 2019 gold report. If you haven't read that, I encourage you to do so. It's perfectly free. I promise we won't spam the heck out of you. You can have it. There is a follow-up report with some case studies. And of course, I will invite you to do business with me. But no harm, no foul, no obligations. It's completely up to you. But this is exciting times, and I think the context in that free report is something you should consider. So please have a look at that. Without further ado, we will go to our questions. Now, we had a few already here before we started. Let me make sure I find the right ones, and we'll go from there. Okay, so jump to the front of the line. If you're a subscriber or you have my email, you got to the front of the line. But I am looking at the chat here, and I'll try to get to everybody's questions, as many as I can before my voice runs out. Okay, so the first question I have is actually not to do with the flash in the pan today, but is there a course or a program that teaches the valuation process in natural resources? I get this question a lot. I feel for you. There's a book project in there that's on my plate. One of these days, I do intend to write that book that doesn't quite exist yet. But I do have some more useful answers for you than that. I guess the short answer is no, there isn't a really easy way to do this. And even if you went to the Colorado School of Mines or someplace like that, you'd have to study different courses in geology and economic geology. And then you'd have to get out there in reality, because the reality from being in the field and being in the markets as well as looking at the rocks is very different from what they teach you at university. And neither the geology course nor the MBA in finance or whatever, neither half is going to do it. Really, this is a school of hard knocks, school of hard rocks. You have to get out there and experience them. That said, times like this, you can ask me questions, anything specific that I can help you learn, anything I can do for you, I will. You can, if we're not having a live session, you can send us questions on the feedback forms on the website. If it's interesting, educational, I may take it up for free, not just the paid readers. I may find it generally interesting enough to share with everybody out there, so I can help educate you along the way. That is very much part of my mission. I think educated speculators are better speculators. They're less prone to panic, see the trade through, and that's good for all of us. One more thing I would say is that these conferences, some are better than others perhaps. I like to go to the Sprott show that they do. It's coming up next month, and it's become really a premier event since Rick took it over. And okay, he's my friend. You can discount that if you want. But I love going to these things because, one, I get to meet a bunch of you guys. And so many of you have become friends. It's fun. We have a little dinner for readers. By the way, if you're interested in that, drop us a note. We'll see if there's room for you at the table. But I also get to meet new people, and I get to meet a lot of companies. For me, it puts all of sort of these fish in a barrel, if you will, to go after them at once. I can grill them, I can saute them, I can serve them up and see if any are of interest. I find it very useful, but I'm suggesting to you that this can be a very educational opportunity. You can talk to me at my booth. If there's anything I can help you understand or get a grip on, that would help. One more thing, and this is completely new as far as I know, is that I've started taking a few readers with me on my due diligence trips. Obviously, this complicates things logistically. It's not easy to do. I can't take a large group. Maybe at some point we'll have enough money we can rent an airplane and do it all together or something. But right now, I have opened it up, and my first experience with it was extraordinarily positive. And we did a lot of driving around several Western states looking at projects, and we got to talk. And this was one of the questions came up, how do you evaluate resource stocks? And there's no book on it, but we could talk about different ways to do that. It was very interesting. And I have to say that the two guys on the trip, one was a geologist, one was an analyst, and the education was both ways. And both of them had feedback for me. It was a lot of fun, very interesting. So short version, I will do my best to help you in one format or the other. Don't be shy about asking, and I'll do what I can for you. Second question, is there a list of projects broken down by type, category, metal, and so on? I have seen websites that try to deliver this. If you have the money to get a Bloomberg screen or an Terra version, or the Capital IQ is a resource that I've found to be quite useful, particularly with the mining side of the finance world. If you have money for those sorts of things, they're very useful. There are free websites, however, from time to time who pop up, and I didn't have time to find this. I thought about it, I just couldn't remember the URL, and I did some searches, I couldn't find it. But there are free websites that pop up from time to time that do these sort of things. They're interactive. You type silver, early stage or something, and you can find some. Oh, by the way, if any of you in the audience know this, I never discount the intelligence of my audience. They're very knowledgeable. Feel free to post something in the chat there if you know of one of these websites. I'm just spacing at the moment on one. The one thing I would caution about these is that most of them, they go through the company's annual reports, or they go through, if you're lucky, their latest presentation to present data on company projects, where they are, metal type, stage. And these things, there's no uniform standard for them. There's no rule as to how many ounces makes this a big project. There's no clear definition between early stage, mid stage, development stage. Oh, that's one to warn you. A lot of companies call themselves developers, but they're not really. A developer is building a mine. Anything before building a mine is exploration, maybe advanced exploration, but it's not development. So what I'm saying is, you can't have a robot go through and company websites and put something together that's going to be really accurate. It takes human judgment. And if a website has the money to hire humans to make sure that the stuff reported is accurate, great. Otherwise, just take it with a grain of salt. Make sure you double check things. But as a place to start, if some website publishes things that have been gathered by robots from companies' annual reports and things, that's not a bad place to start. Okie doke. Next question. I think I've answered this already, but I'll touch on it again. Could we see a pullback to the 1350 range? Absolutely. When markets, we like to say they carve out a bottom. You see this sort of U shape. You see, my technical friends will tell me, you'll see a series of higher highs and higher lows. And my technical friends tell me that the series of higher lows is really what's important. Putting that trend line underneath the bottom gives you more confidence. And if that bottom trend line is broken, the downside potential is more dire. So we've seen a bottom carved out. We see the beginning of what I think will be a major head northwards, but that doesn't mean there'll be no volatility. What could do that? Well, right now, just today, Trump is announcing great meeting with Xi. We're calling off the dogs for now. We're going to be able to negotiate a new deal. If that good news causes the Fed to pull back from its easier dovish stance that we've heard recently, the interest rate or the weak dollar argument for gold could go away for a while, and that could whack gold, that could send it down. On the other hand, I wouldn't count on that. I'm not saying that you should expect that, because that very same thing, if Monday morning Wall Street opens and says, oh my God, there's good news. How terrible. That means the Fed won't rescue us. That means no more free money. Sell, right? You could actually see gold go up anyway. You could see one of those cases. And we have seen quite a few over the last 9 months where gold and the dollar go up at the same time. So it is not safe to assume that, bad dollar, good gold. That doesn't always happen. Sometimes fear drives both up, and we could see that. But I'm trying to be honest again, as I started out saying, I'm excited, and I don't want to let that cloud my judgment. Yes, we could see retracements. As long as we see a series of higher lows, however, I think the overall argument remains intact. All right, sorry, I have to read, and I'm not a speed reader here. I'm trying to read your questions. All right, well, this is a fair question. I'm trying to establish a futures entry point, but I keep adding to my best gold positions. I'm nervous about getting more gold and silver bullion. This is a good thing. There's nothing wrong with you. If you have some great picks, don't feel like you have to have more. I do think it's important to have a basket. If you have all your money on one stock that you love, a fantastic story, like Pretium seems to really be bringing it home now. That's not in my portfolio right now, but it is a story I know well, and it does seem like they have solved some of the problems that plagued them early on in operations, and higher gold prices are a no-brainer for that stock. So, if you have something like that you know and you understand and you feel very strongly about, and we get an opportunity to average down, there's nothing wrong with adding to a position. But you definitely do want to have a basket, because even the best of companies, suppose this case that I mentioned, Pretium, suppose they really have worked things out and the mine really is going to be a cash cow, and suddenly they discover some endangered species is in this lake that they thought was empty that they're putting their tailings in. It would be the end of the mine. I'm not predicting that. Please don't take that to mean that I know something. Hint, hint. That's not the case at all. I'm just giving an example of how the best stories can be derailed. You want to have a basket, but don't feel any pressure. Don't make you make a bad decision. My standard now, and remember, the whole idea of my current newsletter is not just that I'm free with disclosure to invest in what I write about. No. The whole idea is that I only write about it if I'm willing to put my own money into it. So I invest in what I'm writing about. Everything in the newsletter today, that's my personal portfolio. And I'm not going there if it's not good enough for me to put my own money into it. And that's made it a fairly small portfolio. It's made me careful. And I think that's a good thing. That aligns my interest with yours. So I would much rather, maybe I'm a genetic freak. I am invincible when it comes to FOMO. I honestly, I don't care about missing out. I hate losing money. I hate feeling like I made a bad decision in haste. I would much rather go with what I know. And if I have a basket I'm happy with, I'd rather double down on them than feel like, oh, I got to have something else. Oh, I got to have more, and rush into a bad decision. That being said, basket is important. You do want to look at new things. And the one tip I can say without giving anybody individual advice is I think the sector to look to is actually silver right now. Gold and silver will continue going up if I'm right, but silver is still relatively on sale. It hasn't broken out in the same way. Good silver plays, pure silver isn't really an option, but silver prime, well, if it's a silver stream perhaps, but silver primary, good silver primary is really hard to come by. And there are opportunities there. This is an area of primary focus. But I'll tell you what, if I don't find one that ticks all the boxes, that really convinces me, okay, not just good, not just interesting, but great speculation that I'm willing to put my own money into, I'd rather average down on the silver plays that I have now. There's one in particular I think is a screaming buy, even though it's bumped up lately, because it's going to deliver enormous added value in the near term. So don't panic. Don't chase stocks. You've heard me say that before. Be disciplined. It will pay for you. Okay, I got another question on the silver thing. I did just write an article. It should be on the first page full of articles on our homepage. But if not, if you hit the archive under Speculator's Digest, there's an article entitled Silver's Day is Coming. Are you ready? And so the question is, when will silver rally? And the answer is, I'm not sure. And the other answer is, if anybody tells you they know when silver is going to take off, I would be very, very cautious about accepting that. Nobody really knows. Now, I would say that in this article, I posted some longer term charts that make it look like silver was below gold at the beginning of a rally for just a short period of time, and then goes off and takes off. But those are pretty long charts. The current, if you look at them in scale, the current lag of silver doesn't mean that it's about to catch up with gold compared to those historical times. I'll add something else. It's my perception that what really drives a silver story, like silver is more volatile. And so when not just the gold bugs, but when the general market perceives that the gold rally is for real, it's going places, it will take silver with it. But what will make silver really take off? What will make it go into one of its mini rallies? This is an area of research that I'm still working on. I don't have a formula for predicting this. I'm not sure I ever will. But from what I've seen from the data, what seems to happen, and like when the Hunt brothers did this, and in 2010, 2011, when silver got way ahead of gold, the two common things from those periods are bull market, major bull market for precious metals combined, and then a perception of scarcity or a problem with silver supply. If you think about the Hunt brothers back in 1980, they were trying to corner the silver market, so that sent things vertical. Back in 2010, we were still coming out of the crash of 2008. The miners, many of the big miners, had put the brakes on their development, and most silver is produced as a byproduct. So you had big copper mines shutting down, slowing down, not coming online, and most silver actually doesn't even come from silver, lead, zinc mines, the very high grade ones we know and love. Most of it comes from the big copper mines as a byproduct. And so there was a perception that silver supply was going into reverse at the same time that precious metals were taking off. And so that really lit a fire under silver. Now, this could happen again if we have a situation this year, or maybe next, where the global economy is visibly, deteriorating. And we already have slowing in Europe. We have the ECB cutting its growth projections. If that gets worse and the big miners start saying, okay, we're going to scale back, we're not going to flood the market with a time of reduced demand, we could see silver supply dramatically impacted. At the same time, that very same fear is driving precious metals north. And now think about what I just said. This would be a response of the sector to economic trends. This doesn't happen overnight. So I'm not worried about silver taking off tomorrow. I am taking my time to do my due diligence on new silver plays. If I do add one to my portfolio in the month ahead, it will be one that I'm just convinced has all the right stuff. Other than that, I'm willing to miss it. That said, I do think we have time. I do think we would have to see these economic dominoes fall before we get that real, fire under silver's butt that makes it take off. But it will rise with gold. That I am not worried about at all. All right, next question. In your own portfolio, what have you chosen as your position investment type to maximize returns in a gold bull market? Okay, I think you're asking a company type question here. Where am I allocating? And the answer here is not necessarily a what you should do answer. And I'm glad you asked this because it is my portfolio. And on the one hand, that's good because it means it's not theoretical. It's not a model portfolio. It's not, oh, you could have got this if you bought at the bottom and sold at the top. It's what I actually did. And by the way, for people who are not subscribers, I show the evidence for these trades. I show screenshots of my orders placed with my broker, shows broker's fees, Forex fees, how much money I put in, how many shares I got, what date, everything. I try to document with full transparency everything I do. So good news, yay, I really believe on what I'm doing. I have skin in the game. I'm in there in the trenches with you. Bad news is that's my personal priorities. And so right now, for example, I'm not really interested in any of the majors. At the stage of life that I'm in, I'm more about wealth creation than minimizing risk. And so I'm not saying I'm absolutely swinging for the bleachers with every pitch. That makes for a lot more missed balls. But I am farther out on the risk curve than some folks say on fixed income might be. And so there are some really good big companies that are just known quality operators, I think really good. I think Agnico Eagle is one that comes to mind. through thick and thin, these guys have always seemed to do the right thing as operators. They have setbacks, but unlike other people that have gone crazy adding to their balance sheet, and it just seems like that's a quality run company. So, but I don't own it. It's not in my portfolio. I'm not recommending it. I'm just saying that if my mentality was in a different place, I could see wanting to add leverage to the gold price with a quality producer like that. But I'm looking to do more. So the answer to your question is what I'm doing is I'm looking for advanced exploration. I call this success in progress. Right now, I have no grassroots projects in my portfolio. And yes, I know that's where the 10 baggers are. When somebody goes from having absolutely nothing to having a discovery of significance, the difference in value is enormous. Yes, that is the stuff of 10 baggers. But it's extremely difficult to predict. Nobody I know can absolutely predict that. Not Rick Rule, not Doug Casey, and honestly, not me. Nobody knows when a discovery is going to happen. But when somebody has made a discovery and it has the right stuff, it's obviously a discovery of merit. They just keep hitting in the drills. It's getting bigger and bigger. There's plenty of time to make money on that success in progress. So that is one earlier stage area that I'm willing to bet on. The other one is the pre-production sweet spot. Of course, it's sort of my claim to fame from back in my Casey days. The marketing guys called it the golden runway. But I've done extensive research on first-time mine builders, and the statistics there are extraordinary. I need to update my report on this, but just real quick, most people who start building a mine, their first mine, succeed. 95% of them do. The average return on these first-time mine builders, the average return is about a double, close to 100%. I have over 100 data points meaning company examples in my study on this. And it's extraordinarily robust data. On the high end, the top performers can deliver 6, 7, 8, 900% gains on the order of a discovery, but with much less risk. So this sweet spot is very much the sweet spot for me. And I have several picks right now in the pre-production sweet spot in my portfolio. I also like the royalty business. It's just sort of the sweet spot overall for the sector. You have so much potential upside in royalty plays, quality royalty plays, without the risk and downside that comes with mining and all the problems you can have with that. So I like those too. And though this topic today is really the gold breakout, we are also on the verge of the Section 232 decision by Trump on uranium in the US. So I think there's a near-term pop in the other yellow metal, and I'm heavily invested in that and looking to deploy more cash there. I don't know how that will go. I don't want to get too far down that rabbit hole, but just real quick summary. I think the fundamentals for uranium are so strong that it doesn't matter whether Trump supports the US uranium industry or not. But if he does, there's a potential for a very quick gain, a significant, very quick gain in the near term. He has to, by statute, make his decision by July 14. So we're just a couple weeks from that. So it's not a hot tip. I'm just saying this one is, the fuse is lit. And that's not me saying that or waving my arms. I just waved my arm saying that. That's fact. Trump has to decide by July 14. So very interesting time if you want to speculate on an if question as opposed to a when question, as Rick mentioned yesterday. Okay, I am coming to you live from sunny Puerto Rico, and it's warm. So I'm going to mop my face and have a drink while I read the next question. And by the way, every once in a while I get questions about Puerto Rico. It's not what we're here for today, but we've been here for 5 years. We are enjoying the tax benefits. It is amazing. I have a 100% capital gains tax holiday until 2036 because I moved here. And as a speculator, as a person whose income I expect to be largely based on capital gains, even more than my newsletter income, this is enormous. So if you're at all interested, I do encourage people, you can contact me. I'll do what I can to help you, hook you up with people who can help you out with the move, or you want to ask questions. This is very significant. Don't overlook the opportunity to not only make money, but keep more of what you make by moving here. You do have to move here. All right. Next question. Okay. Well, okay, I've answered half of this. Next question, 2 markets I would love to hear on. Okay, I wanted to talk about the gold breakout, but I said my piece, and I'm here to help you. So if you want to talk about other things, that's fine. Don't feel constrained. I want to be as useful to you as I can in this session. And full disclosure, I've always joked about this, but it's not really a joke. You know, my evil plan, I'm evil here, I'm an evil speculator, and my evil plan is to help you make a boatload of money, because that's a win-win for me. If I help you, even not as a paid subscriber, if I help you, one, that gives you the means to subscribe, and two, the motivation. You'd have to wonder, you know, what else am I doing? What am I doing with my own money? And in fact, I can even say I've had readers of the free weekly digest say, oh, I watched your interview, I made a bunch of money, and therefore I'm subscribing. This has actually worked for me. My evil plan works. So ask whatever you want. It is in my self-interest and maybe my character. I want to do everything I can to help you. So this new question is, I want to hear about my take on uranium and helium. So I already covered uranium a little bit briefly. I will reiterate, I think the fundamentals are very strong. It's one of those things where if the short term doesn't pan out, if you don't panic and you hold, I think you will not only be made whole, I think you will come out way ahead. Uranium, nuclear power is baseload power in the United States, large parts of the world. It cannot be replaced anytime soon. It cannot be mined at current prices. You know, even the lowest cost producers in the world, in Canada and Kazakhstan, are cutting back production because of the low prices. So in my mind, this is absolutely a when, not if question. I think the when could be very soon. Prices got low because of extra supply that seems to have dried up. And so, yes, I have my own money deployed in the uranium space right now. If 232 kicks it into higher gear, great. If not, I'm not worried in the least. I'm extremely bullish. That having been said, I do think there's still plenty of appetite to move away from nuclear power in the world. And I'm not sure this is a forever thing. And I'm not sure how long it will take. I don't think the thorium option is anything that can be done in less than a decade. I don't think renewables are going to take away the pie from anybody for a long time. LNG could do it, but even that will take years and years to build up. So I'm extremely bullish on uranium. Now, helium is a different thing. Helium, one of the first things I look at when we look at a commodity is how big is the market? How liquid is it? How good is the price discovery? This is a terrible market. It's a tiny little niche market. And what's the price? There's no international spot price for helium. There's the last US auction of excess helium reserves. You know, so what does that tell you? Well, we're auctioning excess helium reserves. This is clearly not something that can be in critical short supply. The other thing to know about helium is that it's a byproduct. A lot of gas fields produce helium as a byproduct, and they just vent it. It doesn't, you know, the prices are low enough that it doesn't matter. So this is the kind of situation where if there's a temporary supply crunch, you know, yes, helium has uses. I'm not saying helium has no value. I'm not saying it's not important. It's used in MRIs, not just party balloons. It's got many important industrial uses. So it's not going away. And if for some reason there is a little bit of imbalance in the market, yes, you could see prices pop up. But it's not rare. It is a byproduct. The US is selling off its excess reserves. So high prices, I think, would very quickly be the cure for high prices there. That said, you know, if there's a pop there and you're in early, you know, you might make money. But that's just not a risk-reward proposition I'm interested in. I much prefer the asymmetrical risk of something like uranium or gold that I see now. I mean, either one could go down, could wobble, could retreat, but either one, I think the fundamentals say there's really only one way to go over the years to come. And I don't see that in helium at all. So, okay. Oh, one more thing, sorry. There are big producers in helium. Yes, there are some juniors out there, and if there's flavor of the day excitement about helium, you know, a penny stock can easily double. It can quintuple just on excitement. But that doesn't make it a safe bet. And the big boys could easily flood the market if they want to. There's no moat here, to use Buffett terms. All right, next question. Do I still discuss investing ideas in exchange with my former colleagues at Casey Research? Yes, I do. Um, it's sort of an interesting thing that, when I worked at Casey Research, one of the policies that came into place with the ownership change in 2015 was that I could not put my money where my mouth was. I could not invest in anything I wrote about, supposedly to avoid the conflict of interest of possible front running or something. And I understand that. Um, but honestly, when that policy happened, we got hundreds of protests. People just hated that policy, and not a single person wrote in to say, "Oh, I feel so much better now that you can't invest in what you write about." But anyway, that was the policy, and what it meant though was that it kind of made it difficult for me to compare notes with Doug because, Doug is Doug. You gotta love him. He's just the way he is. If I talk to him about an idea, you really like it, he'd go buy it. And then I couldn't write about it because not only could I not write about something I invested in, I couldn't write about something I knew Doug had invested in. So it actually got to the point where if I had something I was really excited about, I wouldn't tell Doug not until after I wrote about it. And now that's not the case. I have no restriction. I can compare notes with Doug all the time, and I do. He was my friend for years before I started working for him at Casey Research, and that hasn't changed. And he is what he is. He's a firebrand, loose cannon sometimes, but I just have a soft spot in my heart for Doug, and he has so much more experience than me. And it is what it is. So I'm very happy to still be able to draw on his experience and share. As for other folks at Casey Research, it's not a whole lot of give and take there. Actually, Dave Forrest, my replacement at the International Speculator, I helped him get that position. I know him. He's a real geologist. He's a real McCoy. I can't really speak to what's happening there now, but I felt comfortable turning over the reins to him because he actually does know what he's doing, or that was my perception. So, and I thought he was a good guy. I thought he was a fairly straight shooter. So it sounds like I'm equivocating. In my experience, Dave Forrest was not a fairly straight shooter. He was a straight shooter. And I won't get into long stories, but let me just say I had personal experience where he could have taken the easy way out on something or done something ethically, maybe, I wouldn't, but he didn't. He did the ethical thing. He did the right thing. I have personal experience of that with Dave. And so I felt comfortable handing over the reins. Not that I got a choice, but I did feel comfortable handing over the reins. And I do talk with Nick Giambruno and some of the others from time to time. All right, next question, section 232. My gut feeling. Thank you for asking for gut feeling, because if you ask me what will happen, I'd have to say, I don't know. That's the only honest answer anybody can give here. And I understand that there are two sides to this. There are people who are concerned, well, it pits the US uranium producers against the utility industry. And Trump, he would respond to both of those. So I can see that. Which one's more important to him? Hard to say. The producers are a smaller thing, but utilities, they are what they are. They're highly regulated, safe, supposed businesses. I just don't see them as being as exciting and interesting as the producers. And perhaps more importantly, and this is gut, again, this is just my gut. I mean, just look at Trump's rhetoric. Look at his actions, actually, not just his rhetoric. He's very serious about this America First thing. And personally, as an advocate of free markets, I actually would echo what Rick said in our interview yesterday. I don't think the 232 petition should go through. I don't think the market needs to be told how to act here. And I'm not worried that the Canadians are going to suddenly cut off the US supply of uranium or our good friends down under. I just don't really see the national security argument here being compelling enough that needs to happen. But Trump is Mr. America First. And my gut is, I think he's going to back the US producers. It just seems Trumpian. It just seems like the kind of thing that, even if the utilities have deeper pockets than the very few surviving US uranium producers and wannabe producers, it's the sort of thing where he can go to his base and say, look what I did. I protected American jobs. I protected America's national security interest. We get 95% of our uranium from foreigners, and we depend on that for our power grid, and that's not acceptable. It just seems very Trumpian. So for whatever it's worth, My guess is that he's probably going to come down, and that's one reason why I've looked to deploy cash before that. But again, if that doesn't happen, and by the way, if that doesn't happen and quality uranium picks sell off, I think that'd be a spectacular buying opportunity, because longer term, this is a one-way street and it's headed upwards. All right, next question. Do I think it's wise to invest in small gold producers that are discounted because of their higher all-in sustaining costs? Well, actually, two ways to answer this. Having a high all-in sustaining cost, whether you're small or large, is actually an argument for investing in a particular company in a rising gold price environment. I actually heard Eric Sprott make this argument just recently on one of his podcasts, but it's one of the things that I was educated on very early in my career. I was in Nevada kicking rocks with Hans Rasmussen, then of White Knight Resources, currently with Coeur d'Alene, geophysicist from Nevada, old friend now. And I remember discussing this, and he, I wanted the most profitable gold companies. I wanted the companies with the highest margins. I felt safer there. Those were obviously the better companies. And I'm not sure if it was Hans. It might have been somebody else in the car. I remember him being there. But I remember somebody turned around and said, no. You want the ones with the slenderest margins. You want the ones who are just barely making it. Because if you're making $500 an ounce in margin on your gold, and gold goes up $100, well, your margin's just gone up 20%. But if you're making $1 per ounce on your gold production, and gold goes up $100, your margin's just gone up 100-fold. Now, that's an extreme case, but you get the point. The change in profitability is an investable event. So there's an argument to be made for going for the low all-in sustaining cost producers, the low margin producers. That argument has just been made. Thank you very much. It's not my preference. I'd rather stick with the better companies, because you know what? What if the company who's just barely making it has an even worse quarter, and when gold goes up, and that increased margin turns out to be a loss or something? I hate losing money. And yes, maybe I could make more placing a bet on a company that their income is about to go through the roof. But if they're struggling, I just don't feel I can count on that. And I'm okay with a solid gain on a respectable one. Now, small versus large is a different question. And the smaller company is going to be higher risk than the larger one, no matter what. So a smaller company with slender margins, I would worry about even more. That case could still be made that if they pull it off, their share price will respond even more. But you have to understand that you're taking a higher level of risk there. Personally, I'd much rather bet on success in progress, which would also benefit from higher gold prices, pre-production sweet spot. One of my current pre-production sweet spot picks right now has just gone vertical over the last month, and really nothing has changed that much. They're building the mine. There's some new pictures on the website. But the rising gold price environment sure has folks excited about this, and they are getting closer to that first pour, the end point of the pre-production sweet spot, where things tend to accelerate towards the end. If I can more reliably, not entirely reliably, because there's never a sure thing in this business, but if I can more reliably have a big win in that space, I'd rather do that than bet on a slender margin turning into a bigger margin. Next question. How about the debt in the gold mining space? I think it made me vulnerable. This is a bigger question we probably have time to really get into, but it's an interesting point. If the Fed does lose it and they end up totally in a responsive point, in the back seat, as it were, we could see them have to raise rates even if they don't want to. There's only so much you can drop them. And if that were to happen, or let's say the trade war ends, Europe turns around, and the global economy goes on the mend, yay, and the Fed starts raising rates again. Any company that's struggling right now and has a lot of debt, if that interest rate goes up, that's a serious issue. So my sort of broad answer here, rather than getting into all the economics and projecting and guessing what will happen, would be, one, I'm not really seeing higher rates anytime soon. Whether the Fed cuts rates or not, I think the global economy is in enough trouble that for the near term, probably for the rest of this year, I'm not worried about higher interest rates. and therefore, if the companies are making it now, their debt covenants, that they really, there's no reason to panic on that front. I guess the sort of point to focus in on here is that there can be a special case of opportunity here. If you remember during the crash of 2008, when everything went into free fall, and even gold for a while, short while, because it was the only thing people could get a bid on, there were serious problems with debt covenants from even some of the larger, better companies. I remember Tech in particular was one that was making headlines at the time because they were at risk of violation from their debt covenants. And the stock went from $50 to $3. And okay, yeah, there was a risk there with their debt, but it was Tech at $3. That was one where I almost pounded the table. I couldn't believe how cheap this stock was, and I couldn't believe the company was going to go away, or that the bank would want them to go under. The bank would renegotiate. But that was at the crux of 2008, and the higher ups at the time in my previous employment, nobody wanted to bet on a copper company or copper primary company when the global economy was falling apart and the world was in crisis. But I was right. Tech went on their rally very soon thereafter, went up over $60. And that panic about the debt covenants was a big part of why it got so cheap. So all I'm saying is, watch for this. If we do get into one of these issues where changing rates cause debt crises, if there's a really good company, if there's a solid company, I wouldn't say too big to fail, but one that you're really not worried about going away, there could be spectacular buying opportunities driven by this debt issue. Somebody mentions that there's a book by someone named Don Duret, who had, or two T's, Duret perhaps, a book on how to value gold and silver stocks. I haven't read that myself, so I can't vouch for it. But since I haven't written my book, I'm perfectly happy to share. Maybe you can look that up on Amazon, see if that looks good to you. What are some of the names of great managers of companies? Okay, so this is sort of an Explorers League question. One of the things that I thought my former boss at Casey Research, David Galland, Doug was the guru, but David Galland was the guy who really created what became Casey Research. And one of the brilliant things he did was he created this thing called the Explorers League. And he created an honor, right? Like there was even a trophy or something at one point for people who had been serially successful. I'm no longer associated with Casey Research, of course. I don't run the Explorers League. It became a non-product after a while, so I'm not sure they maintain that. But if you remember that Explorers League list, or if you do a Google search for Casey Research Explorers League, you probably find those names are still out there. And some of the ones that are on that list that are still active, well, they've become my friends. I don't know if this is if I can be accused of bias or something if I give you some of these names, but one would be Ron Peratt from AUEX. A few people have found as many gold deposits in the world, or in his part of the world in Nevada, as Ron. I really like Ron Netolitsky, and not all of Ron Netolitsky's plays are winners, but he's honest about them. He laughs and he's willing to poke fun at himself, and he knows a good deposit, and he's been associated with some spectacular wins for shareholders. So both Rons are high on my list. Who else do I know is still active? Well, the Poliquins from Almaden were serially successful. I like those guys a lot. Very strong technically. In fact, I would give credit to the younger Poliquin, Morgan Poliquin. He's probably single-handedly done more to educate me on geology than anybody else. Those guys really know their stuff. Who else? I wasn't expecting this question, so I don't have the list off the top of my head. But I would say you're pretty safe going with that list, that Explorers League list, if you can find it online. Any of those guys that are still active are certainly worth betting on. Some of them, I'm not sure if they're active. Bob Quatermain, for example, just stepped down from Pretium. If there was a new Bob Quatermain play, I'd be very interested in that. So that's one to watch for as opposed to one to look at now. But I like the question because people was the first P of the famous 8 Ps that Doug Casey taught me. And it's very much where I start. When somebody, one of you, suggests a company or a company comes across my desk from some other source, the first thing I do is I go to the management tab and I look through my little black list of people who I know have lied to me or failed spectacularly or didn't stand up for shareholders in some way or another. And then I start looking for people that I know and trust. That's a big plus. And then there's Google, by the way. You can do your own due diligence on this. If you Google key members of a management team of company and you get a page full of lawsuits over the decades, that tells you something. So good question. Definitely start with people and look for relevant experience. It shouldn't be that hard to find. We have another suggestion in the chat here. The chat, by the way, should remain live in the recording, and there are suggestions in the chat for sources. Somebody is suggesting juniorminingnetwork.com for more information. So that's not one I use. Can't say plus or minus one way or the other, just pointing this out for the audience. Okay, this is a good question. Cobalt and the other energy metals. So separate answers. One is the energy paradigm shift. I'm absolutely as bullish as ever on that. I don't want anybody to think, oh, what happened? You were talking about the battery metals. You don't say anything anymore. You're wishy-washy. That's not the case. What I have said, as I've touched on it periodically in the reminders, is these are still industrial metals. So if the global economy is slowing down, if we're worried, the retreat in Europe, if the trade war is hurting China more than they're letting on, the slowdown in Chinese auto sales has been spectacular in recent months. These kinds of things I think are very important. I also think that the Fed, they talk about insurance rate cut or something like that, maybe just to be safe. Our economy's fine, but we just want to make sure everything stays fine. No, that's nonsense. They're not going to cut rates unless they're worried. And I think there are plenty of reasons to be worried in the global economy today. And that's not good for industrial minerals, any of them, even the ones in short supply, even the ones essential to the new energy paradigm. So what I'm saying is not that it's over. I'm not saying that I've changed my mind about how that plays out. I'm just saying that it makes no sense to start deploying a bunch of cash into that if we might see great buying opportunities ahead. And that's the case. That's the way I see it right now. I don't think we're in a situation where the boat's about to sail without us. It's certainly not. I'm not worried. I'm not losing any sleep that suddenly cobalt or copper is going to take off tomorrow and, oh, I missed it. I think the risk of that is almost zero. Whereas there's a pretty good chance we're going to see lower prices in the near term, which could create great buying opportunities ahead of what essentially is not an if, but a when question. The world is moving in that direction. There are certain minerals that are essential for this change in paradigm and energy, and some of them are in short supply. And it's not just exotic things like cobalt, but copper itself. I'm extremely bullish on copper and nickel, two very sort of ordinary metals that are just central to the new energy paradigm. I'm very bullish on both of those. I will say, I'm being straight with you here, that the projection I had on cobalt turned out to be off over the course of the last year. So I'm going back to my research on that. And fortunately, like I say, I'm not feeling like I'm about to miss a boat here. I think there's time to have a look at this again. There has been new supply in cobalt. Cobalt did not go exactly as I expected. So to be determined. My answer on that one is watch this space. When I have fresh numbers that I feel confident on, then I will have those to report to all of you. Only answer if you run out of gold questions. Okay, so this is a question about technical analysis on the gold price. And here, I don't know, I may make as many enemies as friends, but it's well known that I'm not a technical analyst myself. And that's not to say that I see no value in it. My general view is that technical analysis can really help you see patterns and explain, but it's looking in the rearview mirror. And there are very, very few times when it helps us look forward. And I think most of the better TA people that are out there, most of them don't try to use it to make forecasts. They don't say, well, in 70% of the cases where we had this flag and pennant pattern or this cup and handle pattern, then the thing broke out to the positive and went up X%. In fact, I can't even remember seeing a prediction exactly like that, where somebody really says, and here's what happens in this circumstance X% of the time. So kudos to them for not trying to overstate their case for what it does. That having been said, my own sense, and from reading these things over 15 years, is that it just has very little predictive power. It has a lot of descriptive power. It helps us understand, what was going on, what was the change in the market appetite. It signals events that are worth paying attention to. But I haven't seen anybody consistently be able to see, okay, these things predict this. One of the best, very best technical analysts that I know, and I'm not going to mention him because I don't want to embarrass anybody. He might be listening. Consider him a friend. And he really does a very thorough job of multivariate analysis. He doesn't just look at the gold price. He looks at the gold price in the context of commodities. He also looks at it in the context of money, other alternative forms of money. He looks at the fundamentals. He has just this really involved process. But he does make calls. And he runs a sort of group. And they had, under some circumstances, some really great luck. They made some great calls, and some of their plays worked out. But then they had some that just were wrong, and like consistently wrong. It just never came true for years. So that sort of thing makes me very nervous. And my long answer, I guess, short question, is I like to look at the technicals. I like to see, I like the explanation, and I like being able to have those highlights. Like, this really is different. Even though I'm not a technical analyst, it clearly means something to me that gold broke out of that 5-year trading range. And not just broke out a little, but a lot, and that it stayed there. That means something. There is something different in the market right now than was the case before that happened. And I think that is real and meaningful. And more than that, my motto, caveat emptor, beware of any technical analysts making predictions, but I think the good guys are worth listening to in terms of helping to understand what's going on today. Somebody's chiming in on the silver question. They're saying the last, he says cycle. I'm not sure if that's the last bull run or from trough to peak, or whether that's the whole thing. But anyway, he's saying it took a year for silver to take off after gold took off. So once again, don't be fooled by seeing the little squiggle down at the beginning of a long-term chart. That chart, look at the scale for how long that time is. Now, it is possible that we could see silver take off faster than I'm thinking, but I'm not expecting it in the next couple of weeks. I think it may catch up with gold somewhat, the gold-silver ratio, which again is not predictive, but it is way out of whack. I could see it going back to 80, and that would be a great thing for silver. I could see it going back to 70. Without any major changes. That would be a fantastic thing for silver. But one of these like mini manias that I talk about, when you have this combination of perceived scarcity coming on the silver space plus the precious metals taking off, I think we need to see some changes in the market, and we certainly don't have that right now. I don't see this huge fear of suddenly silver disappearing from the market yet, and so that gives us a trigger potentially to look for that big rally. What would I say the biggest factors I look for when evaluating a silver mining stock? That's a little narrow. I would say that in general, the factors are very similar for different metals. There are, I guess, some silver specific things in that it, for example, tends to be a byproduct where gold tends to be primary. There are specific things like bulk silver, an open pit, heap leachable bulk silver critter is pretty rare, and they tend to be more complicated. The metallurgy is not as straightforward as it is for gold. So there are some differences between gold and silver, certainly silver and other, or the precious metals, other metals. But that's actually at a finer level of detail. The critical issues are the same for almost any speculation I get into. And honestly, I go by the formula that Doug taught me and made him so much money over the decades. Those 8 Ps, for a while they were 9. I think they're back to 8 again. But and the first one is people. I don't care how good the story is. I don't care how exciting the rocks are. I'm not going there if I don't trust the people. And I'm absolutely not going there if I know these people have repeatedly let shareholders down before, or have a track record of litigious problems or have lied to me. And yes, there are some people who have flat out lied to my face over the years. And no, I will not publish that list. I don't want to get sued. Thank you very much. And it's part of my special sauce. It's part of what I bring to bear, that experience for my readers. But that's the starting place, and I go through the P's. Other things, I think that's enough. Those P's are there. Start with the people, look at the project, look at the politics, all those things, and then I might bring the specific experience to bear on whether it's silver or whatever the metal is I'm looking at. All right, royalty question. Do I think the royalty and streaming companies will underperform going forward? Well, it depends on what you mean by, well, I guess the answer is probably yes, in a way. Especially the big ones. It's really hard for a great big company like Franco-Nevada or Royal Gold, big in the gold space, by mainstream standards. All the gold companies are relatively small, certainly compared to an Apple or an Alphabet. But that said, so it's harder for a big company to hand you a 10-bagger than a smaller company. There are smaller royalty companies, but there's also more risk associated with that. But on the other hand, the royalty business is so solid. It's such a great business model that I feel much safer. So, okay, maybe I'm not looking at a 10-bagger in a year on my favorite royalty play. It could easily be a 10-bagger over time. And my risk in the play is much less. It's much more the sort of stock that you buy, throw it in a drawer, forget about it for a while. Unless there's an actual problem with it, something bad happens to the company, it's really the sort of thing that you don't need to worry about. You get paid whether the mine is profitable or not. You get paid something, whether gold goes up and down or whatever. You might make more, you might make less. But it's such a robust business model. You could call it underperforming if gold goes wacky this year and the miners and the explorers go wacky this year with it. I probably would not expect certainly the bigger royalty companies to go vertical as much. But my risk in those is much less. And in time, they can easily add a lot of, remember that the royalty plays have optionality. Remember that they have all these royalties that are not yet producing in their portfolios. So if the price of whatever commodity or whatever type of royalty it is goes higher and stays there, some of those assets will come into production. And some of those assets are very material, even for large companies like Franco and the others. So in time, I think those guys, yeah, I just love the business. So I'm resistant. I'm finding myself not wanting to say they're going to underperform. I would say they'll perform differently and commensurate with the risk involved. All right. Okay, that's not a question. That's a thank you note. Thank you very much. Much appreciated. I am trying to help, and I'm glad that it feels to you that I am. Gold confiscation. Yes, that's a good question. And I love it that my audience is so well informed. Actually, let me digress. I mentioned that on this field trip that I just took, where we had a couple of my readers, and one was an analyst for another publication, and one was a geologist. I'm finding this, the more and more I correspond with my readers, the more and more I'm realizing that it's a cut above. You guys are an elite audience, and most of you are in the business in one way or the other. You're geologists, you're company CEOs, you're professionals in the business, you're professionals on the financial side. Many of you are money managers, many of you are deep-pocketed investors, and the ones of you who are working on becoming deep-pocket investors are highly informed. You guys know that even in the United States, where we have enviable rule of law, the government can and has decided to confiscate people's gold in 1933 through executive fiat, no less. So it is good to keep history in mind. That said, I'm not really worried about it right now. I think a world in which we'd have to worry about the United States government in particular, maybe other governments might do it quicker, but the United States government or the Canadian government, where most of my readers are, deciding to confiscate people's personal gold is very unlikely. A world when that happens, we've already made so much money, we've been able to take profits. And I don't know about you, what are you planning to do when it really goes vertical? I will take profits off the table, and I'm not going to put them all back into gold precisely for this sort of thing. You don't want to put all your eggs in one basket. I'll buy real assets of other things. Maybe buy a shopping mall in a great location, or another house in a place that I want to live. Salta with Doug down there, or Bariloche. It's such a beautiful place in Argentina. Lots of things that I can do to take money off the table and put it in something hard, something real that the governments would have a hard time confiscating. But that said, I do think that confiscation scenario right now, it's not even on the radar for the powers that be. They're so far from being worried about gold and gold prices that it's just not a concern for me right now. I think I'd be much more worried if I had a huge amount of exposure to Bitcoin. That's much more likely to get regulated. You're potentially threatening, the fiat currencies directly there. And if that threat is perceived to be very real and imminent, I could absolutely see governments cracking down on that around. And yes, okay, the system itself might be government proof, but the users are not. Don't forget how they caught Al Capone. They never caught him on the murders and things. They did a lifestyle audit and they got him on income taxes. So remember, as robust as the cryptocurrencies may be, the users are still squishy. I would look to perhaps Bitcoin as being a canary in the coal mine for us. If governments start getting vicious on the cryptos, that'll tell us that they're starting to get more worried, and that might be a signal to start diversifying and maybe taking more profits off the table to diversify into other real assets that are hard to confiscate. All right, next one. If there were no such thing as crypto right now, do I think gold would be much higher? I've addressed this question in a number of ways. And I guess the short version for the gold, if you mean the gold price itself, no. I really don't think they're the same at all. I do not subscribe to the notion that cryptocurrencies are the new gold. They're very, very different. At the end of the day, it matters that an ounce of gold is something you can hold in your hand. It's physical. You can touch it. It's the long for which there is no short. All of these things are highly unique, distinguishing characteristics that are very important. Doesn't mean there's no place for cryptos. It doesn't mean I'm opposed to cryptos. Personally, I believe in free markets, and I think any alternatives to government fiat currencies are great. The more the merrier. Let the market decide who will win. But it's one thing to be a currency. It's another thing to be a physically useful amount of matter that has uses in the real world, despite Warren Buffett's claims. Gold is the most malleable. It's got all these most ductile. It has specific uses. It's highly corrosive resistant. It's great for making solar sails. We were just discussing on Twitter, what happens about, if we discover gold in the asteroids. Well, it's great for making solar sails, free transportation in outer space. It has physical uses. It's a thing. It's a real thing in the real world. That's very different from anything that's merely digital. So, no, I don't think that's driving the price of gold. Now, I do think that the fear of missing out on that particular flavor of the day is meaningful. It does attract that highly liquid pool of capital that sloshes around to whatever the flavor of the day is. He clearly sloshed into Bitcoin in a big way in 2017. I think a lot of that same capital sloshed into pot stocks in 2018. It might be that 2019 is the year that it all comes sloshing back into the gold stocks. But you know what? It doesn't have to. The real McCoys, the companies that actually have something of merit, they're making money, or they have a project that can make money at current prices or even lower prices, those will go ahead and those will return money for investors, whether that highly liquid pool of momentum chasing capital comes back or not. I just realized we're working on an hour and 15 minutes here. I've still got more questions. I can wet my whistle. You don't have to watch the whole thing. If you're done, if you're over, please, if you haven't downloaded the updated special report on gold for this year, I do think there are some eye-opening charts and some basic fundamentals that you need to understand. And I think the subsequent case studies report is extremely valuable if you haven't read that. If you have already, the bottom line message I'm trying to say is asymmetrical risk. I see very little, huge, very little big downside in gold going forward. I see potentially life-changing upside that you don't want to miss. Could I be wrong? Yes, but I am personally putting my own money into it, and I hope you'll join me. I hope you'll subscribe. There's buttons for that all over the website, and I'd love to help you make a bunch of money. Now, I'm not dead yet, so let me see if I can pick off a few more here. The water question. Let me wet my whistle. The water as a commodity, as a speculative play story is one that actually Rick brought to my attention. And much to my surprise, did spectacularly well for us. We recommended, back in my Casey days when Rick first brought this up, recommended a company called American Water. AWK, if memory serves, was the symbol. And I thought this is a water utility, and it was growing. And there are water scarcity issues. So I just thought, as a utility play, this was a safe way to get into the water space and the narrative on the water story. It's a scarcer and scarcer commodity around the world every year. It was a good way to play it. But it was a big company, great big company, utility, American utility. So I didn't mention it in the Speculator. I mentioned it in the large cap letter. And much to my surprise, that sucker just about doubled. I honestly, I didn't expect it to do that well. But it tells you something about the strength of the story. And it's something that a lot of people, rightly or wrongly, fear. It's something that's very newsy. Now, is the world going to run out of water? No. At a price, the water will be there. But it is a great story. And I think it's a story that lasts for a very long time. The problem for me right now, I don't have any water plays in my portfolio. I think American Water probably continues to do well over the years. It's been more volatile since that big win for us. But I think it's a great company. I think if you wanted to own something like a utility, a relatively safe play in this sector, that's probably a good way to go. Now, me, as a speculator, trying to create wealth rather than protect it, or with a little leverage, I want something like a junior. Who's going to be the person who makes a water discovery? Well, you can't really discover water. So what I zoomed in on was the way to play this was the desalination process. There are areas of the world where water is very scarce, and if you can come up with a better mousetrap to help people get clean drinking water in these places, that could potentially be a game changer. I could see a stock that delivers a new technology or just grows gangbusters, installing existing reverse osmosis technology in places like that. I could see that being really good. I just haven't found a quality company in this space. I have researched a few. I'm not going to name any names. I'm not a short seller, and I don't want to get sued. But I found a few, and some that had some big projects they were going to build, but they were, I don't know, they weren't very responsive to my questions. They didn't want to talk about their feasibility numbers. I don't want to beat this one to death, and there are probably a few more questions here I want to try to rip through quickly. So I like the story. I think there is a big play out there that works. As far as a junior type thing that can really give me a 10 bagger or something, I just haven't found one yet that I like. So interesting story. What is the best ratio of companies to hold, producers versus mid-tiers? I think that's not a one-size-fits-all. If I was on a fixed income, I would absolutely skew more towards the bigger, safer producers. I'm looking to maximize gains myself, so I'm more heavily skewed towards the exploration, success in progress plays and the pre-production sweet spot plays. And I also think you need to come to your own thoughts about which commodities you like best. It matters. If you're more bullish than I am, for example, now on cobalt or whatever, by all means, take everything that I teach you, apply the P's, Doug's P's, listen to what I say about discipline. If you can convince yourself you've found something in a space I'm not interested in, go for it. Don't wait for me. But I don't think there's an ideal there. I think you have to look at your own risk reward, or if there is an ideal, it comes from self-examination. You need to be honest with yourself. If you're the sort of person who's going to, panic if the stock goes down significantly without any bad news from the company, then that tells you need to avoid the more volatile end. of the market. When uranium kicks into full effect, what is my exit strategy? So I would say two things. One would be I intend to take profits when I have them and go risk-free as soon as possible, what we used to call the Casey free ride back in my Casey days. And then I'm not worried about it. Let the rest ride as high as it goes, great. Um, so I either take a Casey free ride or I might put a trailing stop loss. It depends on how far into it we are. If I think the uranium has a long way yet to rise up, I might put a trailing stop loss instead of taking profits right away, because that does limit the upside. But either way, either I take profits and then have a completely risk-free position, or I put a trailing stop loss on there and I make sure that I don't lose my gains. And that way I have a win no matter what happens. So that's answer one. Answer two is I'm highly, highly confident of uranium rising over the next couple of years. After that, I do think it will take really decades for uranium to be phased out, if it's phased out. The climate change concern could actually reignite the uranium renaissance, and we could see uranium or nuclear power, sorry, go into greater adoption in the years ahead. That would be fantastic. If we see that, great. But if we don't see that and the world struggles, muddles along, tries to get rid of nuclear power despite everything, I'm not going to stick around for that. I'm not going to stick around for the world to realize it's wrong. So I have a sort of 2-year time horizon there that, if nuclear power doesn't go into renaissance mode, it might become long in the tooth. I said two answers, but I'm thinking of a third. The other is if it goes absolutely vertical again, if we have another spike up to 140 bucks or beyond the way we did before, that changes the risk reward nature of the thing. If uranium prices go absolutely vertical, well above the cost of production, remember that uranium is not rare. High prices will be the cure for high prices. Uranium is actually a byproduct of some other mines, phosphate mines in particular. So this cannot go on forever. High prices would be the cure for high prices. If we have a vertical event, I would absolutely look towards redeploying elsewhere until I see a new floor put in. Okay, thank you for the fun comments and the compliments. I'm not going to go there because we have a few minutes left before my voice gives out. I answered the nickel question. Yes, I'm bullish on nickel, not in the immediate term. My opinion on Bitcoin, will government make it illegal? I think I covered that already. And I want to stress again, I'm not anti-Bitcoin. I think it's fantastic. I think it's brilliant. I wish it every success. I cannot say that I see intrinsic value on it. I cannot say that I see what the correct price should be. Should it be 10,000? Should it be 20,000? Should it be $1? I don't know what the correct price of Bitcoin is. But I'm very happy to see the market start to give governments competition in the money space. I think that's a wonderful development. I think it's very bullish for the human race going forward, whatever happens to this particular cryptocurrency. But it's a very different thing from gold. It's just not the same thing in my view at all. Question got purged. Sorry. My thoughts on Gold Discovery's approach. I think you're referring to a specific company you're capitalizing in, Gold Discoveries. I'd have to pause and look that up. I'm not going to do that right now, but maybe it's something to look forward to in the future. Okay, thank you. I'm not going to answer questions about specific companies. That rubs the border of the newsletter exemption. I can't give individual advice. And frankly, securities analysis is what my clients, I don't think of my subscribers as customers. I think of them as clients. So that's what my clients pay me for. I do actually give analysis of companies that I don't write up a company and put it in my portfolio unless I'm willing to put my own money into it. It has to be that good. I have to be that excited about it as a great, not good, not okay, but great speculation that I'm willing to put it in my own portfolio. But I do have a column called My Take, and I do give my take on other companies. So if you're interested in that, that is a subscription service. Any interest in agriculture? Yes and no. This is one where Doug has been bullish. He's been early, and boy, talk about skin in the game, putting your money where your mouth is. He was sure that cattle was going to go up some years ago. He was so sure that he started building herds on his property in Argentina. And then the government banned exporting beef. I'm not sure if they reversed that yet or where that stands. So it's something that I am not as experienced in. Would I include it? Would I go there? Absolutely, under the right circumstances. It's probably not something I'm going to be early on. It's the sort of thing where when a trend is visibly in motion, it has strength, I'm confident that that trend has a long way to go, then that's when I'd start digging in and probably have a conversation with Doug. That would be my starting point, and then I'd do my own due diligence for where to go from there. Thank you again for all the positive comments. What are my thoughts on the hydrogeochemistry for undercover exploration plays? Well, we actually have an interview on this. There's a company exploring using water and gold in water, which gold is not highly dissolvable. It's one of its unique chemical and physical attributes. But water is a universal solvent. It does dissolve everything at some level. And if you have super, super sensitive detection equipment, you can poke wells and take water samples across a large area. You can start to look up flow and see where the gold is coming from. There is a company doing that. They've had, I'd say, theoretical success or proof of concept kind of success so far. They haven't made a big discovery. My general thought is it's still not cheap. I mean, it's going to be easier to sample the water table over a very large area than to do detailed soil sampling over that area. But at the end of the day, it's a targeting tool. It's going to bring you into an area where the water isn't going to give you enough definition to be able to tell you where to drill. So you're going to need to use other techniques to drill and discover. But if it works, if that narrows the field down and then you can apply more conventional techniques and you can make discoveries, that's great. Right now, I haven't seen that yet. It is on my radar. And if this company or any other starts having a much higher success ratio using that tool, I think that'd be wonderful, because there's so many parts of the world where it seems picked over, but the parts that are picked over are the mountains that stick out of the desert, and the mountains continue underground. The logic of there being so much more in these well-endowed areas that's undercover, that makes perfect sense to me. I want to see this working, and then I'll be very excited about it. Question about the 3X ETFs. The one thing to remember about those, well, I guess two things I'll say. One is I have played with these a little bit. And one reason why I have done that, I've experimented with my own sort of trading signals. I actually did look at some of these technical predictors, and I thought I was onto something, and I tested it. And it worked in theory, but the execution made it very difficult to actually make money in practice. But the reason why I was willing to go there was, one, we have the Robinhood trading platform, and now that's forced other people to make free trading possible for normal equities like ETFs trading in the US. So to be able to trade in and out with no brokerage fees was a big deal. If you had fees going in and out, then it could eat up your gains dancing in and out of positions without a high frequency option. And the other thing was, having moved to Puerto Rico and having no capital gains tax right now, that meant if I made a short-term trade and I had a big win, it wouldn't get eaten up in taxes. So being able to trade for free and being able to book short-term gains without high tax consequences made it interesting to me to speculate on the near-term momentum of some of these highly leveraged ETFs. All of that having been said, remember, these things are not directly chained one-to-one. They don't always deliver 3 times. They are funds that attempt, or their goal is to deliver 3 times. And they don't always work, and they're not meant to be held for long term. If I think gold is going up next year, I would not buy a leveraged ETF today. That's not what they're meant to do. It's not what they're meant to deliver on. So, beware. They are short-term trading vehicles. And if you have, a situation like mine where you can take advantage of that, it can be interesting. My own trading system that I developed, theoretical success. It wasn't good enough to go public on yet. To be continued. I hope to refine that and do better on that. If uranium spikes to an all-time high, I've gotten to the bottom of the question list and we've gone on for an hour and a half now, so I'm going to make this my last question. The other yellow medal gets the last question prize. If uranium spikes to an all-time high, would I short it? No. I have found repeatedly that something is crazy, I should short this. And I would say, if not 100% of the times I have found that, it's got to be high 90s that I have been so glad I didn't short it. Because just because something is crazy doesn't mean it can't get crazier. In terms of a price like this, that's not a common thing that comes to my mind. I haven't frequently said, oh, that's such a high price, I'm going to short this price. But it happens a lot looking at mining companies. There's sometimes I'm in the field and it's clear this company has serious problems. The geologist is complaining about upper management. They're at loggerheads or something, or the mine is completely disorganized. The engineers couldn't turn around and put their hand on a wrench if they wanted to. Things like that have a very high correlation in my experience with negative outcomes. On the other hand, that correlation is not immediate. There have been cases where it took years for my perception that this is a disaster in the making to be right. And if I had shorted that, I'd have to not just be right, I'd have to be right on the timing. And so maybe when I grow up, I'll do more short plays. But right now, it has been the sort of thing that I've been very glad I haven't embarked in. So no, I wouldn't short, but absolutely I would cash in. If I'm making a bunch of money, I'm perfectly happy to get a 5-bagger instead of a 10-bagger and have no risk. So I would take profits or put a trailing stop loss. I would lock in gains if uranium or gold or any other commodity that I'm investing in goes crazy. All right, I am running out of voice, so thank you all very much. Once again, I hope you like what you hear. I hope that you will subscribe to the Independent Speculator and let me help you further and educate you further. If you're not ready for that, I hope you'll subscribe to the free service that we have. I promise not to spam you every day with crazy things, and I'll do my best to educate you and to help you and hopefully persuade you to upgrade in time. And if you have not read that free report, it's the top link on our homepage, the Gold Breakout 2019, How to Profit. I strongly encourage you to read that. I hope you'll do business with me, but if not, absolutely no strings attached. I will not spam you from here for forever. Please check that out. Thank you all for listening. Thanks for the great conversation. Thank you for the kind words. I look forward to doing this again.